Hey everybody, in this video we are talking to Zeneca, acclaimed NFT trader, the founder of Zen Academy, and we're going to be discussing the current state of affairs in the NFT market, being a professional poker player, which was his previous career, and art blocks and generative art in general. So really a juicy show coming up here. As usual, nothing in this video is financial advice. We are not financial advisors. The NFT space is insanely risky, so always do your own research. And as always, if you enjoy the content, hit the like button, smash the subscribe button. It really helps. Shout out to our sponsor, FTX. Sign up at thenifty.com/FTX or with the code THENIFTY on your FTX mobile app. And without any further ado, the man himself, Zeneca.
Hello, hello. How are you both?
Good. How are you, man?
Doing well.
We both said that at the same time. Jinx, double jinx.
Jinx. Oh, crap.
It's great to have you on, man. You know, long overdue. We had you on the morning show and you kicked ass. Everybody enjoyed it. You know, it's an interesting time in the NFT market. And at this point, all three of us are like, you know, kind of wily vets, obviously not OGs from like 2018 or something, but we all have over a year under our belt. And I'm sure some trophies and some battle wounds, some scars, you know? So I just wanted to kind of kick things off. Like, could you tell people a little bit about yourself, you know, maybe how you got into the NFT space, and we'll kind of take it from there?
Yeah, so I was a professional poker player for 15 years prior to all of this, basically. So it's kind of all I did from high school straight into poker. And that was a whole wild experience, as you can imagine. But it was, I dabbled into crypto in 2017, 2018, I think, like a lot of people, when Ethereum was popping off the first time and it's gaining a lot of attention. But then that 2018 bear market hit, and I was like, that was a fun experiment back to real life. Like I don't fully get it. I didn't have that conviction that I kind of feel like I have now. And then early 2021 rolled around, and things started picking up again, and I started looking into crypto more because I still had some coins, and then NFTs were like this new thing, and I heard about them, and obviously I thought they were a scam. I think, like most people, the first impression of NFTs, like, what are these JPEGs worth $1,000, and you can get a rare one for 5,000 or 10? That seems crazy. So, but you know, a few weeks later, a bit more research, it started to click, and yeah, I just fell down the rabbit hole, and I'm still falling to this day.
Incredible, man. And there's definitely a lot of parallels. When I talk to former professional poker players, one of the mods in our Solana section is a former professional poker player, and he's constantly referencing the parallels between that game and the NFT trading game specifically. Obviously, you've had monster wins as an investor, right? You're a Fidenza owner. You have a lot of other like really banging generative art projects. You have a Bored Ape, you know, all these things you benefited from holding. But as like a trader, you also participate that way. Have you found that the poker skill set has, you know, been a big positive for you coming in and maybe made the learning curve of the NFT market a bit easier?
Oh yeah, 1,000%. I think, I mean, there's no end to the parallels between poker player and NFT trader, or just trader in general, sports bettor. There's a lot of sort of these overlapping industries or niches or things that share a lot of similarities. And I think at the end of it, a lot of it comes down to you're dealing with money and like making or losing money. You're placing bets. You're taking calculated risks based on, you know, incomplete information. And you know, I did that for 15 years as poker, and so that experience has surely helped in various areas. I would say probably the most helpful part is like the mental side of things, and just sort of being able to deal with and handle the swings and the emotions of, you know, oh crap, I sold something and then it went to 10 ETH. Oh, that sucks. Or oh, I slept in and I missed a mint that, you know, it was a free mint or 0.03, and now they're at 0.5 ETH or 1 ETH, and you know, everyone around me minted 20 of them, and you know, you feel all that, you know, FOMO, and you compare yourself to others, and it's just like it's an emotional roller coaster, this space. It really is crazy. And I think that the most beneficial thing that poker taught me, it wasn't like the statistics or the math or the finances or any of that helped, bankroll management helped, but it's just like getting used to the fact of making and losing money or missing out on money, and having just that level of comfort and that relationship to, I always call it like a healthy disassociation to money, where you need to, you can't care too much if you're like fretting over every dollar, every ETH, all the time, and like translating like, oh, that's a holiday, that's a car, that's rent, that's food, that's a nice meal, you go crazy, and like every decision you're paralyzed. But then if you don't care enough and you just like, oh, okay, it's just play money, then you just spew money, you mint every random degen thing, you never take profits. So you need to find that right balance, and poker certainly helped me there.
When you entered this space, what was your sort of like risk tolerance when you with your first purchases? Because I know for myself personally, the level of risk I've taken has gone up astronomically. Obviously, as the NFT bankroll, I guess, got larger, which has frankly not been the most effective thing. In fact, like trying to get back to measured risk has usually been the best strategy, because you can't just throw money and thus make more. It's more of like, how do you pick strategically? But I'm curious at the beginning, because that was something which I didn't fully understand. There were a lot of people that I met who, for example, had bought CryptoPunks at $15,000 to $30,000, something like that. And I'm like, what? You spent like, I have that money in savings, but that to me just feels insane to make that sort of bet. Now, maybe all of them were already millionaires. I don't know, what the distribution looked like among the people that were making those sort of bets. I mean, obviously everybody was in a privileged position to be able to make that sort of bet. But I remember even with my Bored Ape, when I spent $450 the first time, it feeling like a significant amount of money. So I'm wondering for you, like, how did you, when you entered, were you just like, this is the game, I'm showing up to the table, I'm ready to play? Or was it like dip the toe in the water? And in terms of risk exposure, how were you operating at that time?
Yeah, it's a great question. A bit of both. I think I just generally have a much higher risk tolerance than most. But so like getting in February, March last year, my entire crypto bankroll, if I took the ETH I still had from early on and like other coins, I could have, I think I calculated at the time, I could have liquidated everything and bought a CryptoPunk. And like that was like the extent of my bankroll. And a part of me was tempted to do it, but to me, that's a lot more risky to just go all in on one project, especially that early on, rather than just dabble. And honestly, like maybe that was obviously would have been a good strategy to buy CryptoPunk in March last year or February or whatever. But you sort of, it's risky, and something a lot of people don't talk about is the opportunity cost, where if I had all of my money tied up in that, I couldn't have bought Bored Apes at like 0.5, 0.7 ETH, couldn't have minted Gutter Cats when I, minted them, Bonsais, I minted them, and like all those early projects. So yeah, I took that like more, like almost like a spray and pray approach, but like a more calculated approach, where I said, all right, so I've got this ETH, and let me just try and dabble and mint some projects and buy some stuff. And the first bunch didn't work out, but eventually the market just took off. Looking at May, June last year, it started to get really crazy, and it was very much right place, right time. And I guess I was happy enough to take those risks and spend 0.1 ETH on a mint and get 5 of them, or I remember buying the Bored Apes on secondary point. I think I got it for like 0.5, 0.7, and 0.8. I got 3. I can't remember, but I'm fairly confident that they would have been the most expensive NFTs I bought at the time. But it felt right, and like I was, just willing to pull that trigger and take that calculated risk.
I think you raised a good point, which is, so it sounds like you had somewhere between 10 and 40K basically when you got started with in your crypto portfolio. And that is something that didn't click for me, because I had been in crypto and then just exited. I basically, I had a negligible amount of money in crypto at that point in time. And now we had this boom happening again. And so, that actually clicks a lot more. There were probably a lot of people who ended up buying CryptoPunks that had a bunch of ETH basically that was sitting there. And for them, that was kind of house money at that point in time. Yeah. So you're saying, okay, well, like I can make bets in ETH at this point and not even necessarily have the full strategy planned out. Like you
Yeah.
just have the crypto portfolio, which that for whatever reason that didn't click for me, but that makes a ton of sense. And so did you then at that point, you talked about gutter cats, you talked about apes, you talked about some of these other, were you like, I'm going to put 100% of my crypto portfolio into this? Or did it just evolve to that basically once you started seeing all of the action that was happening in the market, it was obviously more exciting, I think, for everybody.
Yeah.
So yeah.
It was, early on, I mean, I tried really hard and succeeded for a while at like keep staying diversified. I had a little bit of Bitcoin. I had ETH and I wouldn't spend it all. But eventually, you know, if you have ETH in your MetaMask, it goes into NFTs. That's the inevitability. And you know, eventually it got around to the point where like I had these altcoins, and then I was like, I can't remember what project it was. There was something that I really, really, really wanted to mint or buy on secondary. I was like, oh, this is amazing. I got to get in. But I had no ETH. And so I was like, oh crap. All right, let me list some other NFTs for sale. Let me undercut the floor, and I need to try and get some liquidity. I didn't really want to accept bids. And then I think I missed the opportunity. And then it dawned on me the next time this happened. I was like, hang on a second. I've got I don't know whether it was Bitcoin or USDC or something else. I was like, I have regular crypto. I could sell crypto for ETH. And then that like clicked. And then I was like, all right. And so that was the end of most of the other coins. And all roads led to NFTs. And then it's sort of like, there was certainly a period where, as far as my crypto portfolio went, I think like 95% plus was in NFTs specifically. And then that just went bonkers. And then as time's gone on, I've diversified back out to try and keep some in ETH in like other wallets and stable coins and even some altcoins and Tezos and other blockchains. But yeah, there's definitely a period early on where it was basically all in NFTs.
I mean, that's just kind of what happens when you dive all the way in. And,
it really is.
you know, like you said, the two sides, right? Where it's like you're thinking that this is lunch or this is my dog's food, like valuing it that way versus, oh, this is just funny money. So the $500,000 I have in this airdrop doesn't really matter, right? And then you end up
crazy.
You know, you end up round tripping. It's nuts. So a couple more poker questions. What's more stressful, being a professional poker player or being like a full-time NFT trader?
That's a good question. I would say I was more stressed for sure as a poker player. But it's hard for me to say if one is more stressful than the other because I'm older, I'm more mature, I've been through stuff. I've learned how to deal with the swings and emotions and stuff like that. And I didn't do this whole NFT trading thing full time for very long. I did it for, you know, a few months, and I was already starting to feel a bit burnt out. And that's sort of when I made that pivot into like creating content and launching Zen Academy and more on the creator side. So I'm still very much in the NFT space, but I would say I was only a full-time trader, maybe for like 4 to 6 months, where like that was my primary purpose and what I was making money off. I would say that with poker, I think I probably felt like I was in control more than with NFTs. Like NFTs, the variance is higher and there's so much outside of your control. Like you can make really good educated guesses and bets and, you know, mint things that have a lot of hype. And there are certainly some basically surefire things. If you get a mint list spot for something that's like crazy hyped, it's like, all right, this is guaranteed to mint at 0.2 and sell it, whatever. Like Invisible Friends, a good example. Yeah. Stuff like that. But for the most part, especially these days, you're still kind of guessing. It's like, all right, I'm going to mint some. I don't really know how it's going to go. I'm going to sweep the floor. It could tank tomorrow and all that kind of stuff. Whereas with poker, sure, you don't know what's going to happen, like how the cards are going to fall, but you have a lot more influence in like your decisions. And you can say, all right, I know how to play this hand. I feel confident. I can go back and reevaluate. And there's a little more structure to it. So yeah, anyway, I guess to answer your question, I felt more stressed as a poker player. Yeah, personally.
Sure. And then one last poker question. No need to get personal, but I'd love to know what was the high point with poker and what was the low point? Because I think people that, you know, have regular jobs, people that maybe don't have the risk tolerance that a professional poker player has, they don't know about the swings. Like, you know, I made X amount on one hand or I lost X amount on one hand. I'd love to know if there's any notable memories there.
Yeah. High points. So I was never much of a tournament player. So I never had like a massive win that point that stands out as a high point. There are certainly several times where I was like, at the end of a really hot run, a streak, and things were going great, and life was amazing, and things were good and going great poker-wise. Probably one of the high points was I ended up being sponsored by PokerStars, one of the big sites, for a few years, and that to me was a high point because it was almost like it was just a secondary avenue of revenue and income, and like it was recognition of like just where I was in the poker space, and it was less about the luck of the draw or cards or how they were going. Some low points though, like I remember one of the first, like I was probably 18 and had recently started playing poker, and so I'm from Australia. I live in Brisbane. We'd flown down to Melbourne, and there's a big casino there, Crown Casino. I went with some friends, and I remember playing a hand, and I had like way too much of my bankroll on the table, and I grew my stack quite large, and I lost it all in one hand, basically. Really bad beat. I had a full house. The other guy had quads, and that sucked. And that's always stood out as a memory. But then a few years later, I was 20, 19 or 20. I was definitely underage. I was in Vegas I was staying at the Bellagio, where you're not even meant to stay if you're under 21, but I can't remember how that happened. I would grow a long beard, and that helped. And yeah, I ended up losing basically all my cash. So I was playing the cash game tables, and I had no cash, and I think my debit card stopped working. I couldn't get cash out, and like I had no way to pay for the hotel room. And like I was like staying there, it was like I needed to check out, but I couldn't check out because I couldn't settle my bill. And I had all this money on online poker sites, and like, maybe $10,000, $20,000, $30,000, I can't remember at the time, but I couldn't translate that into real money real quickly. And so I had my friend Jamie, who's a co-host of my podcast, actually. He flew out from East Coast America, Providence, Rhode Island, and flew to Vegas with a bunch of cash and basically bailed me out. And that was just a funny memory / a bit of a low point. And then maybe like a couple of years, a year or two later, as I was really getting started as like a proper professional, I had like a really bad run and things were going bad, and like I had to borrow some money just to sort of get staked, basically, to play poker and earn. And yeah, that was a bit of a low point, but thankfully I had some friends willing to help out. And after that though, from I think I was like 21 at the time or 22, I basically got my stuff together and practiced. Like I learned my lessons and practiced good bankroll management and made sure that I always had rent paid for at least 6 months and food and all that kind of stuff.
Yeah. So from an early age, kind of managing it. Go ahead, Nick.
You strike me as someone on the NFT side who's incredibly diamond-handed with their portfolio, especially on art blocks. And I think, that's a heavy spot where last year, I don't know what your portfolio distribution is on the NFT side of things of art blocks and art versus collectibles, but I'm assuming it's heavily skewed towards art blocks. I'm wondering, in terms of similar sort of incredible wins, devastating losses, outside of the fact that the most obvious stuff, which is like I sold too early, which is just like everyone, especially during a speculative bubble like we saw last summer, everyone sold too early most of the time, basically, or they sold too late. I mean, that's just pretty common.
I did that.
Yes.
We all did, yeah.
You did it multiple times, basically, if you were really active in the space. Or you'd buy back in. I did that a few times, and that actually worked, surprisingly. That only works in a wild speculative bubble. But I'm wondering for you, have there been points where you've had those sort of devastating losses in this space? And to me, I guess it would be things like buying the top, or like how you usually, and what that leads into is sort of like how you approach that sort of portfolio development. Because you always strike me as someone who has a very measured approach to things. I tend to be individually just volatile. So I'm wondering, how you approach that, and if you've experienced similar things to what that moment was, or if you've now fully learned and you're more stable with those trades.
Yeah, I would say I'm largely, I've learned and I'm more stable. I'm trying to think of specific examples. I just tend not to buy things when they're super inflated, and if the prices have gotten very high, I will usually say, all right, I missed that one. And occasionally I'll buy in if it's like a really legit project. I'm trying to think. Like I don't think I've bought too much at like the higher than say 10 ETH mark or even 5 ETH, but there might be a couple of instances. But yeah, I mean, obviously, like, yeah, again, like the selling too early and holding through for far too long is something I've done a lot of. I think holding is something I probably made a huge mistake on, where I probably should have taken way more profits. I justified it, and I still think it's fairly valid because I'm based in Germany, and the tax rules here are extraordinarily favorable to those who hold for 12 months or longer, where long-term capital gain tax is 0%. So you compare that to almost 50% for if you sell within 12 months. It's like, all right, well, especially because, a lot of the stuff I bought in May, June, July, and it didn't really get crazy price-wise till the end of the year, early this year. And then I was like, well, if I just hold for another 4 months, I can save. And then obviously the market crashed like in April, May, just before the 12 months was up. And that was a bit of a bummer. But yeah, in hindsight, I probably should have sold more. But I practice an approach of trying to at least sell along the way to sort of break even on most projects. I actually take a bit of profit. So like I learned really early on, buy 2 or 3 at least if you're going to buy into a project, and then sell 1 to cover costs, sell 1 to make some profit, and then you at least have 1 for that moonbag potential. And that was like the approach I took for the most part. I'd say most of my like big losses would be just like spending 1 to 5 ETH, sweeping the floor of something that then went to 0 and is now just collecting dust in my wallet.
Yeah, like a bad bet where you put out like some serious liquidity. Like it was a high conviction bet, but it didn't play out.
Yeah, or even some of them are not even that high conviction, but it's like it's so asymmetric. Where if you buy 100 of something at 0.02 ETH, sure you lose 2 or 3 ETH rather than gas if it goes to 0. But if that thing turns out to be the next goblins, or if it even goes to like 0.2 ETH, that's like crazy 10x. So make enough of those. But my problem was that I started doing that, but then I forgot to sell or take profits when they went to like 0.1 or 0.2. I was like, all right, let me just hold. I'll start to sell if they get to 1 ETH. And obviously it's way less likely. And then they ended up going to 0. So I should have at least sold some of those bags. Yeah.
Keep raising the bar as it goes up, which is I think everybody has made that move.
Yeah, greed is a hell of a thing.
Yeah.
It happens, especially in a mania market. So, we touched on art blocks so far. Art blocks is an area that you're known for, and you've got some really great ones. I'd love to hear your thesis on art blocks and, maybe the current state of affairs with them. Obviously, when you came on our show, it was right after the most recent curated or second most recent curated drop happened. You're a Fidenza owner. I know you have some other really great ones. We've been talking more about the fine art side of NFTs and the potential for the traditional art market to come in and kind of get us back to the levels of the peak bull run valuation on some of these projects in the future. I would just love to hear like your take on art blocks, how you think about it, what your long-term plan is, kind of everything art blocks.
Yeah, I mean, art blocks is my highest conviction play or thing in the entire NFT space, perhaps the crypto space. I've been saying this lately. It's like I love betting on people, and there's 2 people I bet on more than anyone. One is Vitalik, and so ETH, and then the other is Snowfro, the founder of Art Blocks, because I love everything he's done here. And but you take those 2 people away, and ETH will continue, and Art Blocks will continue without them. So I think that's one of the powerful things about it. Art Blocks is a platform for releasing generative art, on-chain generative art generated at the time of mint. And I love it because it's really using the blockchain and blockchain technology in a way that is innovative and novel, and creating something that literally could not be possible without the blockchain. A lot of this other stuff you can kind of say, all right, yeah, that exists without blockchain technology. That's just, all right, we're just doing the exact same thing, but on-chain. But with generative art, it's a type of art that's been around. So generative art is like art that's created by code or computers, or something like this. For example, this Fidenza, an artist did not draw these colors with a paintbrush or on their iPad or in Photoshop or something like that. The artist, Tyler Hobbs, he wrote code, and the code said, all right, at X or Y coordinates, draw this color, draw this line, blah, 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 blah. And it's something that's existed as a medium or genre of art since the 60s, I think, 60s and 70s, and in various forms. But it's always been extraordinarily niche and very, it hasn't had any sort of mainstream attention. And the way that generative artists, even, up until a few years ago, would sell their work was they would create a system, an algorithm, generate, hundreds, thousands, sometimes tens of thousands of outputs, and then pick like 5 or 10 and be like, oh, these ones are great. I'm going to sell these. And maybe they sell them as prints or something like that. With art blocks in the blockchain, what becomes possible is the ability to upload the code that would create the art to the blockchain. And then at the time of mint, someone goes to the Upblocks website, clicks mint, and then the output is created and sold and transferred all at the same time. So the artist doesn't know what the output is going to look like exactly. They created the algorithm. They have some idea. They can say, all right, it's going to have like maybe these color palettes or maybe like these flow fields or something like that. But they don't know exactly what it's going to look like. They don't get to curate it. It means that the algorithm has to be sophisticated enough so that basically all of the outputs look good. Because it's kind of crap if someone creates an algorithm where they could generate 1,000 of them, pick 10 that look great, and they're like, all right, let's sell these 10. The other 900 are bad. But now they have to sort of rethink things, and it really takes a level of sophistication and skill to code something where 1,000 people can come to the website and go click mint and be like, oh, this looks cool. This is nice looking art. But also it's part of the same body of work and same algorithm. So one of the taglines of art blocks is, when you mint, you're getting a 1 of 1 of X. So Fidenza, there's 999 of them. When you mint, you get a 1 of 1. It's completely unique. No one else in the world has it. But it's 1 of 1 of 999. There's 999 of them. You can tell, like you look at 50 Fidenzas, you can also say, all right, these are part of the same collection, but they're still distinctive and unique. And it's sort of one of the other nice things is because it is generated at the time of mint, the buyer is involved in the creation process. So it takes the hash from the transaction, like the Ethereum transaction, and it inputs that into the algorithm. So that's something that is unique to the buyer. And so like there's a real relationship between the minter and the artist and the final piece. And I think that all of this together, it just makes it really incredible and magical. And it all lives on chain as well, effectively on chain. So Artblocks as a platform could disappear tomorrow. Snowfro could pack up shop. The Discord could disappear. The website could go down. But you'd always be able to recreate this art. It doesn't live on IPFS. It's all on chain. It's another nice thing. It's resolution agnostic. So 10 years from now, when we have screens that are 50 feet tall, you can blow it up and you won't lose the quality. It's not like a 2000 by 2000 pixel image hosted on IPFS. And we saw this in New York, actually. They had Artblocks events and they had a 30-foot Samsung screen. And it was like awesome seeing some of this stuff generated and put on screen. But anyway, that's a bunch of me gushing about Artblocks. I really think it's a really special platform, and generative art as a whole. Like there are other platforms as well, GMDAO, FXHash, Gen.art. It's not just Artblocks, but Artblocks sort of kicked off this whole Gen art movement.
Yeah, and you bought into GMDAO recently, right? That's actually a recent one. It's fascinating what you said about this stuff. My first question would be like, do you anticipate as part of your thesis in holding these things? Because right now the floor on Fidenza is 92 Ethereum. So, you talked about long-term cap gains. Looks like you could get $155,000 at least for selling. I believe you said you have one Fidenza left, right? And so is part of your thesis that in the future, right, in a few years, that the traditional art world will, kind of come around and take real interest in these things, and the guys that are paying, X amount for a Jeff Koons or for any of the darlings of the traditional art market will actually turn to things like Fidenzas and other art blocks and other generative art as the next investments that they make?
Yeah, absolutely. I feel confident that not all traditional art collectors will love it, but I think it is growing rapidly as a genre, and you'll have the traditional art world, quote unquote, come in, and we've already seen it happen. There have been some massive collectors come in and buy up, especially Fidenzas and Ringers, I think are two of the biggest examples, and Chromie Squiggles. But you're also seeing a lot of crypto native people. I mean, honestly, like myself, and just so many people who had very little interest in art. And like, go back 2 years, I would never have in my wildest dreams imagined myself as an art collector or like really appreciator or lover or anything like that. But I think the NFT space, because it's making it so easy and convenient to like look at art, talk to the artists, talk to other collectors, collect and appreciate and display. It's like this whole new generation is now growing up and becoming aware of, and this is not just generative art. This includes one-on-one art, all sorts of digital NFT art. You don't have to go into a stuffy gallery now where someone's going to turn up their nose at you and be wearing, really obnoxiously hipster clothes and be like talking in really highbrow language about art. And it's just like you can browse OpenSea in your underwear and look for art and like, oh, that looks cool. And like, with FX Hash now on the Tezos network, you can collect and buy stuff for 50 cents, for $1. It doesn't have to be a Fidenza for 100 grand. And so I think there's this really big movement, and a lot more collectors are coming up and appreciating it, because it's digitally native. It's a lot of it's popular for a lot of the reasons art is popular as it is, which is, it looks nice to the artist, the story, but a lot of the high value stuff, it's like that flex value or that cultural value. It's showing off to others, and maybe instead of having a Coons or a what's his name, Damien Hirst on the wall, you now have a Fidenza on your wall or your metaverse wall, and people who have money and want to spend on stuff like that and support culture and support artists. And I just think it's my highest conviction bet, and it's hard to imagine that changing.
Which price would you sell your Fidenza at?
Yeah, that's a really good question. So they went to, I think, like $1 million. Like, I think the floor was 2 to 250 ETH, and I have a slightly rare one back when ETH was 3 to 4K, and I didn't sell.
How you feeling about that?
Yeah, I feel fine about it, because I never had any intention to sell, and like I took enough profits elsewhere. I always say, like, I have no real need for the money, and I wouldn't sell it unless I could get a price that is like way above floor or like out of band. And so then I could use the profits to buy back a different Fidenza and hold profits. So, I mean, obviously, if someone, like today, the floor's 100 ETH. If someone offered me 500 ETH for mine, I'd probably sell it and I'd go buy another one. I'd pocket 400 ETH. If the floor was 500 ETH, I'd probably not sell it. But like, if the floor was like 2,000, 20,000 ETH, someone off, like whatever, something ridiculous, there's always a number, but I don't know what that is.
I mean, if $750,000 is the floor and you're still not selling, I mean, it's quite a position to be in. That said, I mean, it's nice to, like Fidenzas, for example, you can have high conviction. The same I feel about CryptoPunks to a certain degree. Yeah, it's volatile. Yeah, the price may go up and down, but there's some base level that's going to exist there. And I don't envision those going to zero, for example. Now, when it's at $1 million and you write it down to 100,000, it doesn't feel great, but simultaneously, like you said, if you sold anything on the way up and you were able to put money off to the side, then you ended up making more than you ever anticipated when you invested in the NFT space. Basically, we just lucked out on being part of 2021. Like, that's
seriously, it's so lucky. There's so much of this is luck and it doesn't get spoken about enough. But yeah, it was so crazy. Right place, right time. Just bought the right digital animal. It's so stupid.
It's so ludicrous. And to even continue to hold with the apes, I mean, at some point it felt so ludicrous that it was just like, well, let me see where this thing goes, because I have no idea where. Like, I spent $400, so there's no way that I end up like losing.
You're not gonna be on the street.
Yeah. I'm not losing this deal, basically. So I think
we were down like 80+%, and it's still 100 grand for an ape or something.
Yeah, it was, well, yeah, for a minute there, the floor, my target floor on apes was $500,000, which I thought, where I pulled that up, I mean, who knows, but that was my target. It hit 450. I just didn't sell. And
Yeah.
fortunately, I mean, we still got ApeCoin. We got Otherdeeds. I got a, what was the one that we got there? A Coda on one of my pieces of land. So like, I still ended up cashing out like a significant amount from the ecosystem. So it's sort of like, it's an ex-dividend date to me with most of these. And frankly, I still view the ape price over punks as the anticipated dividend expectation that people have. And maybe you could even see slightly more. Like maybe people think the collectible value of apes is below punks, but that dividend is the gap. So that's where I'm like, well, I'm anticipating another 30K, 40K worth of like airdrops essentially at some point in the next 12 months. I don't know.
Yeah.
Which is a little ludicrous.
It's so crazy. But Yuga is really good at finding ways to just create value out of thin air and give it to ape holders, basically.
I wonder if they even like anticipated like that was a possibility. I'm sure at the beginning they didn't even like anticipate those numbers to be the way that they are, and I don't think that they necessarily structured it to be that way. But each subsequent move, they look more and more clever and intelligent with their strategy, and they've done a great job. My question for you would be, like, as you look at some of those things, and we just lived through 2021, where's the biggest opportunity right now that you're looking at outside of obviously developing Zen Academy? And like, we feel the same with our business. Obviously that has the highest potential upside theoretical. But yeah, where do you see the greatest opportunity in this space? And it could be starting businesses.
Yeah, that's a good question. I think the fact starting businesses is probably the right answer because, in reality, there's maybe 100,000 people in the space, probably like active members. It's less than that. Yeah. And if this all goes where we think it's going to go, and there's like literally hundreds of millions, if not like billions of people interacting with NFT technology, then either starting a business that can capture, capitalize, service, work with, and take advantage of all of the opportunities that are going to come over the next 5-10 years is a really smart way to go, or working with like bringing an existing business in to incorporate NFTs. I think in terms of like specific niches or genres, the potential is limitless and endless. And I think, people always say, I used to say NFT gaming as like my answer because the gaming industry is so enormous, a few billion dollars a year, and growing rapidly. And, the younger generation is growing up in Fortnite and Roblox and all that, Minecraft. And absolutely there's tremendous potential in gaming, but I think there's still so much more. Like there are industries way larger than gaming, and the best investment, the best opportunities, I think, are just staying in the space. Don't leave. Like, honestly, if you're listening to this, it's in the bear market, you're in such a tremendous position because you're consuming information and hopefully trying to invest in yourself and learn and improve, so that you're going to be able to capitalize on so many opportunities over the next 6 months, year, 2 years, 5 years. And I don't know what they look like exactly, but there will be no shortage of them. So it just sort of we're so early, and almost it would be difficult not to do well, whatever well means for you, in 5 years if you stick around and work hard.
Yeah, no matter what, it's just going to evolve, right? So like people felt like they missed Bitcoin in 2015 or something, right? And then they ended up having an opportunity to buy ETH at $1. Then people felt like they missed that. Then they felt like they missed Doge. Then now they feel like they missed NFTs. This stuff is just going to continue to evolve. I also think that you'll see a more distinct, there already is a distinct separation, but you'll see the communication surrounding it more distinct when you talk about NFT art, you talk about collectibles, you talk about gaming. Like the thesis for why that Fidenza is a good hold at $150,000 is a different thesis than why an ape is a good hold at $110,000, and is a different thesis to why you should hold whatever the big gaming asset is. Maybe it's Otherdeed, but maybe it's something completely different. We have no idea. I wrote down some gaming questions for you because I didn't know how you felt about this. Like if that's an area you're familiar with, like let's say we get this gaming bull run that everyone's anticipating. People feel that NFTs are just a natural thing to kind of integrate with gaming. In-game assets should be NFTs. You shouldn't even have to worry about calling them NFTs. You shouldn't worry about the kind of piping behind the blockchain piping. Someone should be able to go into a game, play for free, do something hard in the game because of their skill level, get a rare sword. Then that sword is worth money. They can either keep it or they can sell it, right? And then you'll start getting that thing. Do you see yourself investing in gaming assets, or will it depend on what they look like? I'd be curious to know what your kind of, how you're preparing for something like that.
Yeah, I think, it depends is the easiest answer. It really does vary project to project, asset, industry, game, genre. There's a lot of risk associated, I think, with especially investing in a specific asset like that. People in the future would still care about the game that it's from or how early it is or anything like that. So I probably don't see myself personally investing in specific gaming assets, but rather in the companies or the projects behind them and the ecosystems as a whole. So, it could be like Otherdeeds as an example, holding the land, the plots, but maybe not if it comes out that there's items in game and artifacts and all that are separated. I'm probably not going to weigh into the minutia and try but there's probably tremendous opportunity there for someone who does. Again, in the short term, probably for sure, but long term, it depends. In 10 years, 20 years, are people still going to be playing using Otherdeed land or playing Otherside and involved in that? Probably, hopefully. Obviously, being bullish on Yuga, that's the dream, but none of us really know. 20 years is 10 years even is an eon in this space, in the gaming space, in the world. But if these end up being, household names and brands, similar like, Call of Duty, Grand Theft Auto, there's countless, World of Warcraft, there's countless games, Diablo, that they've been around for decades now, which is awesome. And imagine, there's only 100 or 10 or 1 of a really rare item from Diablo 1 that was able to be transferred to Diablo 2, 3, 4. And that would unmistakably be very, very, very valuable. So there certainly is a lot of money to be made or like value in the early assets and the ecosystems. But I think it's too soon to tell which ones will survive, which assets will do well. And I think we have so much work still left to do to go mainstream, because the reality is most gamers, they hate us. They hate NFTs. They hate gaming NFTs. Play to earn is it's just, honestly, it is dystopian, and there's a lot of risks and like minefields we have to navigate. But at the end of the day, I think that it is a match made in heaven, and we will figure out how gaming and NFTs work and coexist in a way that the gamers are happy with as well and don't hate us. But yeah, like they hate us right now.
I'm curious.
It's true.
Yeah, that's pretty clear. Yeah, it's interesting seeing the degree to hate that NFTs get amongst gamers, and it's one which feels longer term for me. When I think of the internet bubble, for example, it took years kind of after that. Like if you said that you were like chatting with people online, people were like, yo, you're a loser. Like that.
You're a creep.
That's true,
like
actually.
that was like a weird thing. And that lasted for years. Like dating online was a weird thing. Then suddenly now it's like the standard. Not dating online and walking up to people and chatting with them is now like more creepy.
That's so true.
And so it's pretty interesting to see that evolution occur. So I kind of have a grasp on some of where you think some of the biggest opportunities are. I'm curious on a more micro level, are there any projects that you're like right now pumped about? And I'm also curious just behaviorally right now. I know that like a few months back, I was like, well, I'm good. I made my NFT money right now. It feels like this is time to go sidelines for a moment. And then once in a while, some NFT pops up and I'm in for like 1 or 2 ETH. But I'm wondering, like, for you, like, are there any projects that have come up recently that you're really actually interested in?
Yeah, I definitely find it increasingly difficult to like keep track of newer projects and even the older ones. And so like so much of my time is on Zen Academy or content or something else that I definitely miss stuff all the time and honestly don't get a chance to be too excited about new stuff, even though there is amazing stuff coming out all the time. I get most excited about, like, I have calls with like project founders and builders like all the time, and I hear about some of the really innovative things that they're working on over the next 6 months or 2 years, and I'm like, all right, that's amazing. That's going to change the whole state of the market. I'm in a phase right now where I'm like going through my portfolio and really just like exiting a ton of projects and just like streamlining it mostly. And a lot of them are projects that I really believe in and I think are great, but I just don't have the time to like keep up with them. Like Wolf Game is a good example. There's, the community seems awesome. It seems like that they figured stuff out and have made a fun and engaging game, but it's still a game that like, I don't know. There's this cave game thing that came out a few months ago. Like I couldn't keep track of that. And like, there's these squads you join and the wool price. And I was like, so I've been slowly selling off my Wolf Game assets. 10KTF is another one that I have been selling a bunch of. I put the pause on that. I've still got a bunch, and like now it really has like maybe become this new thing now where it's like, all right, so it could be a huge deal, but again, there's so much, like there's missions you have to go on, and now there was crates that you had to mint, and then keeping track of all the dates, and like I'm in like literally 400 plus projects. I did like a stock take the other day, and I'd ideally love to get that down to like 20. Realistically, that's probably not going to happen anytime soon because I don't want to just dump at floor, but it's going through and trying to find the things that have the highest conviction in and allocating my portfolio there, and or just stacking ETH or keeping it sidelined and focusing on building. And I mean, it's so cliche to focus on building, but like to do that rather than it takes so much mental energy just like in the back of my mind. Oh, I'm in so many projects. Oh, am I missing? You just see a tweet about, oh, it's crap, do I own that project? I gotta go mint that as free claim. And I just want to just clean all that up. So that's where I'm at right now.
Yeah, I mean, when you're actually building, it's not cliche to say that you're building. It's
Yeah.
cliche to say you're building when you're not building. So look, let's talk about Zen Academy for a minute. Me and Nick are both owners. We own it on our
Am
company.
I?
Or I thought you were. I mean,
I thought I was. I was thinking on the show this morning, I was like, wait, did I not buy this? I thought I did. I'm pretty sure I did.
That's like Nick to get busy and not buy. But I bought it on my personal and on the company wallet. So no matter what, our company has exposure, Nick.
Amazing.
So Zen, you have the 333 club, right? Which is like the exclusive club, 333 members. The floor on that is over 10 ETH. So first of all, bravo, props to you on that. And then you have the regular one. And my understanding is that is it a PFP collection that's coming out? Is that the next step?
Yeah, we have honestly a ton of stuff coming out. I went through so the PFP is definitely coming. It's something that we're working on, and it's not something I want to rush, and it's so difficult to do right and do in a way that adds value to the community and the market. So we're definitely still like probably months away from revealing that or releasing that, but it's in the pipeline. Honestly, when I launched last year, I launched just these letters as art and an ERC 1155 because I was like, well, it's just a membership token. I don't want to do a PFP because, the market is flooded with PFPs. We don't need another PFP project. And obviously we've seen like 50,000 new PFP projects. And I've sort of come around to like, all right, so we have a community. A lot of the members, they love to represent themselves with some sort of identity or PFP, as Zen Academy PFP. And so I've just come around to the idea, and I think there's some fun things we can do there. Like people ask me, why do you want to do a PFP? And I think fun is a great reason and a good enough reason in many respects, because we can still do all of the utility that we're currently doing with the membership token, but we just transfer it to the PFP now or something else. And it's a little more exciting and emotionally engaging for people as well. We have, so I went through like a ENS domain registering frenzy like 2 or 3 days ago, because me and my partner, we're moving to Dubai towards the end of this year to set up like just business structures and stuff there, because obviously tax is even better there. And registered an entity called Zen Labs in the UAE. And then I was like, oh crap, I should probably get the ENS for that. And I saw it was taken. So then it was listed for 1 ETH. So I was like, okay, I'm going to grab this. It was the most I've ever paid for an ENS domain. And then I was like thinking about all the other stuff we might want to do. So I went and I registered Zen Media. I registered Zen Marketing, Zen Consulting, Zen Retreat, Zen, literally like 20 different things. I'm like, all right, the joke in our Slack is like, I'm going to register like Zen gardening services next. But
just in case, right?
Yeah, it's really, but like I used to think, hey, I don't want to build an empire. I'm just happy with our small little cozy community. And, we're humble. We learn together, and, we're not trying to take on the world. And like, over the last few months, I've increasingly been setting my goals higher and higher. I'm like, I kind of want to build an empire. Let's do something awesome and big and fun and create value for everyone in our community, but also add value to the space. And I think there's so much potential and stuff that we can do because we are so early and we have such a wonderful community already. And then, there's so many areas that we can sort of veer into. And I want to do it in a thoughtful and methodical way, I think, bit by bit. But yeah, I don't know if I answered your question. And I know I've said a lot without saying much, but we are keeping a lot close to the vest at this point. But yeah, the next few months, I think you'll see some exciting stuff.
Yeah, that people just need to understand that when you're building a project, there's either proprietary information that can't come out, or, you're just not ready to disclose it. We deal with the same thing. Go ahead, Nick.
Yeah, I was going to say this is exactly the situation. We were doing weekly calls with updates on progress and stuff, and then I was just like, not digging this because of two things. One, either you miss your own target, and I've never historically, up until the fact that we were having those calls, set weekly targets like that, outside of like my personal to-do list where you're saying, hey, here's the different thing. But it also, as you get further and further out on milestones, there's variance, especially as a small business when you don't have like a team of 100 people execute. Although, I don't know, there's like some fine line between efficient, inefficient, and there's
sometimes less is more.
Yeah, exactly.
I was talking to Brendan from Premint, and he was like, he was a one-man show for so long because he was like, I'll just get stuff done, and as you scale, it gets harder to do that. But yeah.
Scaling is a challenging thing, but yeah, we've been running into the same stuff, and it kind of sounds like we're on a similar schedule with some of our items as well, with PFP and other things. So yeah, I mean, it's awesome to have you on and to have a conversation about these sorts of things, and we also happen to be fans, and I may be a collector. I don't know. I need to go check right now. but definitely I'm going to add one if I haven't already. My apologies.
I totally get it.
If you bought what I bought, it was a better price.
I'm on like, all the time people ask me, do you own any of the XYZ? And I'm like, I think so. I don't know. Let me go search my wallet. And then I was like, let me search another wallet. It's just at a certain point, obviously epitome of first world problems, but you lose track of the projects you're in.
All of my incredible collectibles that I own, when literally a year and a half ago, I didn't collect a damn thing. My walls were completely blank. I didn't have any art. And now suddenly I'm like, I'm a world-class art collector. So
I must add a hearse to the collection. I must, Well, ladies and gentlemen, hope you enjoyed the show. Make sure you follow Zeneca on Twitter. It's easy to find his Twitter profile. He's got like hundreds of thousands of followers. Check out Zen Academy on OpenSea, and that is the token that gets you access to his community, which is a kick-ass community. There's a lot of members of our community that participate there, and we know some people in the 333 Club, and they have nothing but positive things to say about it. So definitely check that out. Zeneca, thanks so much for joining us. And everyone, make sure you check out Zeneca's content too, his YouTube channel, podcast, everything like that. Thanks so much, man.
Thank you so much. Really enjoyed being here. Appreciate it.
Absolutely. Catch you guys next time.